There we go. Alright, alright, so I'm making this video because I want to explain to you guys my new, not new, but my improved strategy. Um, if you guys know the other videos I make, you would know that I use the volume profile, but I didn't use the value area low or value area high. Mainly because I wasn't that educated on the volume profile until recently. Shout out to Cami Capital for this strategy in particular. I basically just copy his strategy. I mean, it's not like a crazy, you know, complicated strategy. It's super simple. It's more so for scalping, which is a little bit new to me. But I mean, so far it's been working pretty well. We full ported today. Um, got out of this trade right on this tick, to the tick, and then the market dumped in. I wonder. I want to see how much time it took. So within five. So my stop loss was I believe my stop was. Let's check out the overnight session. Um, let's see what happened. Oh god, this is terrible. The 5 second time frame. Actually, we don't need to. We don't need that. So I entered right. Actually, no. So my original bias was I wanted to enter right at this level. So I put my limit order for 84.75 right here, and market just dodged it. I was being a little bit greedy with that. I should have just gone 5-0. I don't know why I did that. I just wanted, because I was full porting and I was just greedy. I mean, I just didn't want to get, too much drawdown. But like either way, it doesn't matter. I'm full porting anyway, and if I lose the trade, I lose the account, so it doesn't matter. And I full ported because the monthly payment was, I believe it's like tomorrow or maybe today. But I just wanted to full port, and if I failed the trade, failed the account, I just would buy another account on a different platform because I'm not too keen on Top Step. I don't really like their platform too much. I know TradingView has a better volume profile. You can extend it to the right, so it's constantly updating. Instead of here, you have to constantly drag it. Um, and also, Top Step's just a little bit pricey. I mean, I know prop firms that are a little bit cheaper. However, the first monthly fee is higher, so you need to buy the monthly for like 90, and there's no activation fee, which is a little bit worse than Top Step, but you can pass the account in one trade, which is the best thing about that. Tradeify, TPT, I don't think you can trade in one day and pass. You need at least like 7 days of trading. So, but for Top Step, the thing about it that's good is that you can get an account for like $37, and then if you pass it, you pay the activation fee, and you don't have to worry about blowing like 5 different fundeds and losing $500. Um, you can just blow 5 of them, and it's like 150 or 170. It's not that big of a deal. It's like the price of like 1 to 2 fundeds on another platform. So Top Step, I feel like, is better for people who have a lower price tag and are just getting into funded accounts, because you can save a lot of money just by, you know, um, just by buying these fundeds. And if you lose the challenge, you don't lose a lot of money. You know what I mean? So let's get back to the trade. We full ported. We wanted to enter here. We didn't get filled. and my take profit was going to be 8 points. So I believe I was going to exit at like 9.2 or something. So that would have been an easy 1500, and I was already at 5700, so I would have been at 52,200 on the account. But as you can see, that did not go how I wanted it to. So my idea was I was still going to full port. We came up, tested all these levels from the previous overnight session from yesterday, day before yesterday's overnight session. Came down. This level right here was the value area high for Asia. So I did see that we rejected, came up, came above it, came down, tested it for support. So I was like, alright, we're going to get in here. Got in here, went up, came down, tested it again, came up. My original take profit was like right here. I think like right here actually. But we didn't get that, and then we also tested it again, and I was like, alright, well, we failed it, so I'm just going to move my take profit to the value area high of this current session, which was like right here. Price came up, tested it. I've been getting one tick off for my TP literally every single day, and so I was like, alright, bro, I'm just going to move my take profit to here, and if I get filled for my take profit and I miss out on one tick, so be it, but I am not going to get tickled again by this one tick. So thank God I did that, because after that, price dumped and I would have most definitely lost my funded. One, because it came all the way to here. I would have gotten filled like at like this level, like down here. And my stop loss was somewhere like round here. I think it was at like 7.8, 7.8.5 maybe. I know it was like a thousand. So if I lost, I was gonna be, yeah, I was gonna be like, I wasn't gonna fail it, but I would have literally been right there to failing it, and I would have had like, I would have just not paid the monthly again. I would have just gotten a new account because I would have been in the red, and that's just not the right play. It would have been smarter for me to just get another account, obviously. So I'll go over why I thought about this trade to begin with on the market open, and I already explained here. So there's just one confluence, which was the value area high of the previous session. So, you know, premium turned into support for this session. Also, so for this original trade, we have previous week's value area high. So let's just get on like a higher time frame. There's a lot of levels that don't belong anymore. Here, here, here. Oh yeah, New York's POC. I think I was like right below it. So the previous week's value area high was, let's get on the 5-minute. I have so much garbage over here. We could probably get rid of this, 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 and this. We don't really need that. So the value area high, and actually, which was great that happened, was New York session basically mirrored the value area high of the previous week. So we had a double confluence, and I was like, all right, I'm just gonna take this setup because we had two confluences here. I was already confident, and then out of nowhere, I was monitoring the pre-session, and pre-session, I believe market was yeah, it's around here. So I was on here, and I was like, the POC is pretty close. Then we got to market open, and we pretty much just mirrored this level. So this was a triple confluence area. The previous week's value area high not being as significant, so it was like more like 2.5 confluences. The third one, previous week's value area high, is just to sweeten the deal. As you can see, market came up pre-market, so this was pre-market 929, tested the value area high of Asia session, came down, and I was looking for an entry right on market open. Came to 50 or 85, tested that level, and instantly just went straight to the moon like I was expecting. I put 4 contracts for that limit order, so had so I wouldn't have held it for more than 1500 profit because that's the max amount of daily profit for these fundeds. But if I was trading, like we also have a 4th confluence, not that much of a confluence, but just a lot of, ability to move to the upside, because there was low liquidity in this area right here and above. So I was expecting the market to just tap here and instantly, either test here, come down, get some support again, and then come up. And then once it, came out of that area, I was expecting it to just blow up, in which it did. So that was my other confluence. So it was like such a good setup. But unfortunately, I didn't get to enter on that. Fortunately, we did get an entry and we did take profit for the day. 930. It was actually 1200 that I took on this trade, but I did take a trade on gold and I lost 300 because after I didn't get filled on that first setup, I basically just got pissed and I was like, I still have to full port today. So I just went over to gold, and I believe I entered. I think I entered a long, right? I only used 1 confluence. I just entered on the previous day's value, or no, POC. So I think I entered like right here. Market came up. I should have expected it because I didn't see on the lower time frame, like the 30-second. I believe the POC is right here. So I don't like to use the same confluence when it's been tested. So let's say market comes up, you can see this is the 930. Market came, tested the POC, and then went up. So we already used up our one-time use, and I wasn't on the smaller time frame, so I didn't see it. And that's likely the reason why I was unsuccessful with that trade. As you can see, if I entered market open on the POC, I would have had a banger trade. You know what I mean? I would have probably, I don't know how much risk to put on for, or how many ticks to go for gold, but I probably would have had a banger trade. I wouldn't have gotten stopped there. So yeah, that was my trade idea for gold. Did play out well. So basically, I mean, then this happened. Like, you guys probably know, like, this is some bullshit. I don't know, like, Trump's tariffs have, like, Trump hasn't announced some bullshit in a while, so we were due for some kind of just bullshit. Overall, for this move, I'm expecting us to either hold, get some retrace, or if we can't hold this level right around here. I mean, right here we have a couple of levels, right? We have this POC here. We have a high volume node here. We have the value area low right around this level. So if we fail to hold here, there's pretty much nothing supporting us below that area. So if we fail to hold, we're probably going to be coming all the way down to here, and that momentum's probably going to get a lot of liquidations, and a lot of people are going to be forced to sell onto the open market, and I don't think there's enough buyers that are going to be buying up that area. So I definitely see a big red candle coming down, maybe stopping like around here, where we have a bit of liquidity in the market. But this area right here is just a liquidity void, so I could definitely see us just jumping straight past, that's for sure. Um, I mean, overall, like you guys can probably tell, my new strategy is just jumbling up a bunch of levels that are key. So, like the previous week's value area high, the previous week's POC, um, not so much the current week's POC and value area high, but just the previous week, um, and the overnight session and the New York session before. Um, um, yeah, I mean that's pretty much it. You guys can copy this if you want. It's not. It's so easy to copy. All you do is you just, if you have market experience, should be pretty simple. Just figure out your bias for the day, and if we open on these confluences, just enter. I mean, you don't need to have. It's less about context and just entering with an edge. Like, I would consider this an edge, right? First of all, we have, a higher POC than the previous session. So that's one point for the bulls. That's something that I look for when I'm bullish, is we're putting in higher volume. The market is accepting higher fair value. And do we have any key levels that we can take a trade on? So if there's two or more confluences or key levels stacked together within like 1 to 2 points, then you have reinforcement. So let me break it down. You want to have as many participants supporting your trade as possible, and the way to do that is just to have multiple sets of participants in the market. I'm not sure if this is completely right, so bear with me, but basically there's going to be people that are buying um, and getting their orders filled at this area right here on the POC, because there's just a lot of accumulation within the POC, and I'm sure if New York session had the opportunity to test out that level, there would be a lot of participants that are willing to buy at that area because they didn't get to fill all their orders within this area. And second, you have the value area high, which when tested again becomes support because we put in higher volume. So the premium from yesterday now becomes support because we put in higher volume, right? Which means that the market has already accepted a higher price value for the market, right? And the value area high now becomes the support. I don't know the exact market mechanics behind that one. I pretty much just know the POC. The value area high is a little bit more complicated. It has to do with discount premium. So, and also, I believe my stop loss was relatively tight. I think I put it like down. Maybe, no. I think I put it like right here. Just so I can have support from the value, or the value area high from New York, the overnight's POC, the value area high from the previous week, and New York sessions POC. So all four of those things are defending me, along with the fact that if we make a move to the upside, it's not going to fail because there's low liquidity and there's not many aggressive selling or activity at this area. So, at market open, we have the most volatility, and when you stack a bunch of levels together, it's usually going to result in a big move. And when you couple that with low liquidity, you can expect that move to be quick and fast and without resistance whatsoever, which is exactly what we got on this day. And that's about it. I mean, I'll go over another trade that I took yesterday, I believe. So, right here, we had a double confluence, I believe. So 9:30 to 6:18. You guys want to do that for your sessions. So we opened. We had, I believe, the previous day's value area high, I assume. Let's check that out. Yeah, so we had the value area high of the previous day. We had the POC, and see that's the best part about volume profile trading is you don't have to have too much context for the bias of the day. I literally, market opened right here. I waited. Market went up, came back. I waited for a retest of the POC with this two confluences. That's it. Entered right here for a long trade, right? At O2, all I did was I went for I went for 3 points, and that's about it. Like, that's all I did. I just went for 3 points. I put my stop like right here at 9.9, right? Because there was just a lot of stuff supporting, and the bias for the day was obviously bearish. But you can see that, you know, you can still have a profitable trade even when the bias is bearish, because you're always going to have a reaction at these areas, right? Even if the buyers and the sellers disagree and the sellers overpower the buyers eventually, you know, there's always going to be some kind of reaction at these levels, and you can just scalp it. You don't have to have, you know, you don't have to take a trade and put a huge, like, take profit trying to expect the buys for the day, when instead you can always just take a reliable trade. You know, you can have a higher win percentage with a 1-to-1 RR than you can with, you know, a higher RR trying to, you know, it depends on the market, really. Like, for gold right now, I would probably do that. I would probably enter, and I wouldn't put a take profit that tight, because I would expect gold to rally as it has been. But, you know, ES is just chopping right now. It's more so bullish than bearish, but, you know, it's just been choppy, you know what I mean? And that's what's great about the volume profile, is that any market conditions you can succeed with. I used to wait 30 minutes for the volume profile of the New York session to develop, but recently I've been noticing that it was brought to my attention that, you know, these levels on the market open always have a reaction right as the New York session opens up. You know, you're never going to have multiple times in a row where the market sees these levels and it doesn't react to it, because these are mathematically proven levels. It has volume, and there's a reason behind it. There's actual data supporting that level, instead of, you know, just candlesticks and blindly trusting them. You know, that's what I don't. So I used to trade ICT, but now that I notice, you know, these market mechanics, I actually understand why the market moves. Like, if you're trading ICT, right, you're looking at, you know, this move. You're trading any strategy whatsoever. You're looking at this move and you're thinking, oh, we must be bullish. But, you know, you can really just expect, you know, the market to do that even when we're just a bit bullish, because we have low liquidity here and, you know, we have volume up here. So you can expect this move to be quick and fast, only because there's low liquidity, not because we're actually, you know, super bullish and we're going to go to all-time highs. You know, a lot of traders would think that we're going to all-time highs after this quick move, escaping this range. But no, that's not how it works. That's not, you know, the market doesn't work like that. And we had this big move. Basically, what happened here was, we actually might, I mean, that's definitely not happening, until at least like 350, but I think it's definitely possible. I mean, it would be hard. Like, we were at 38, like average 38, 150 points. So from here to here, it's like, it's not even 100 points, to be fair. It's definitely doable. You know, you could take that trade, but, you know, that's about it. You know, it's my new strategy. And also, I've been looking at these right here, these low volume nodes. Learned that from Fabi, or yeah, Fabiana. No, Fabi. Um, Fabiano, maybe. He's like the World Cup guy. He's that scalper. So if you see here, like if you're trading ICT, this is a fair value gap. For me, this is a low volume node, uncontested by buyers. And we also have the previous week's value area low. So we have two levels, so this is now resistance. Because the market sits in a range, right? It's the Gauss bell curve, right? Alright, that's about it. I'm not going into depth on that. That's about it.